Was it Black Friday or was it a Black Friday? What's up, everybody? Welcome aboard to Bubba's Bottom Line, and always great to share some time with you, and happy Thanksgiving weekend to everybody. Hope you had a great weekend enjoying football and whatever it is that you did over the weekend. If you went shopping on Black Friday, I hope you had a great time, and of course I hope you enjoyed yourself, and more importantly, I hope you enjoy time with your family and friends, because of course that's what the holidays are all about. And again, the big question I asked in the open is, was it Black Friday or was it a Black Friday? And early returns, and again, I'm not predicting, nor do I really care, but early returns is it was a Black Friday. Early returns, our sales were nowhere near what they were expected. Now, of course, one of the things we have to remember from a business standpoint is that they've been selling Black Friday started about a week ago, okay? So, again, it's not like it should all be on one day. You know, we seem to forget that pre-internet, pre-Amazon, pre all these other online shopping, that everything was really on Black Friday, and the stores actually opened at 4 in the morning, whatever it was. You know, we had a few that were open on Thanksgiving Day for a couple of hours, but basically the real day was that one day, and that's no longer the case. So it's hard to get a big read. But again, we can see by a lot of the retail earnings reports that came out, yes, their sales were better, but their profit margins were lower, and their expectations going forward are not as good. So again, this is the same theme we have been talking about for months, is that the economy, although better, and although we're seeing job growth and we're seeing some other things, the real issue is higher money cost, higher debt, higher cost to borrow is going to affect the bottom line of these companies, and higher wages. Now again, we have always stated, we have been on the side of wages are going to rise. We did not want government intervention forcing a minimum wage higher. We wanted the free markets. God forbid we should have free markets. We wanted the free market to determine that they had to pay higher wages, and that is what we're seeing right now, because there is an overwhelming demand to employ people and not enough people. So again, how do you get people? You have to pay more money. It's just a simple fact that I really wish that our Federal Reserve and that our government and that everybody would understand that if we would leave the markets alone and leave them to their own devices and let the markets trade, they would learn and know how to price themselves. There's an old saying, asset classes will price themselves simply by the fact on supply and demand, okay? It's very simple, okay? The exchange of wealth takes place at a true price discovery model, but when you have so much intervention from the cluelessness of the Federal Reserve to the idiots from the government, from everybody trying to determine what should be a wage, wages are somehow magically, as everybody kept saying, we need $15 an hour, somehow magically they're now pretty damn close to $15 an hour. Amazon's already there. In my neck of the woods, McDonald's is almost there, Walmart is almost there. So suddenly, magically, it appears that we somehow got back up to that $15, which the Bernie Sanders and the rest of the world is saying, well, we got to have higher minimum wage. Well, let's have some jobs and we will have higher minimum wage. And I think that's what you're seeing right now. Now, again, as we look at some things that are going on, what an ugly week for the crypto world. Man, oh man, thank the world I don't have too much involved there. But again, I think we're looking now at a buying opportunity. Again, I think you have to look at this in many different facets and in many different ways. I am, from a non-believer, okay, I have become a true believer in the cryptocurrencies. Now again, I don't spend them, I don't buy things with them. You know, all the offshore betting sites, all the offshore poker sites, they give you a discount or they'll give you more if you give them cryptocurrencies. But I think that, again, I'm trying to just store them. To me, this is like a way of buying gold or buying a stored asset at a lower price that I'm hoping will come back. Now, obviously, cryptocurrencies and precious metals don't have the same value, because precious metals I can put in my hand, I can touch, smell, feel. I can't eat them, but I can touch and feel them and look at them, and at least they look good, even if they go to if their value changes. But I do think that you are now getting to a point that the crypto world is now going to start, and it'll find a bottom. Again, we all forget that the NASDAQ back in 2001 got crippled. And I think you're seeing very similar. You've had an enormous amount of people fighting against these cryptocurrencies, but what has not changed is the theory of the blockchain, and that is not going to change. And of course, you're going to continue to see, people puking out. Remember, like any other market, the crypto world had a major momentum swing. You had what we call them the Momo chasers, the momentum chasers, that chased the prices to ridiculous levels, and now they're coming right back. And of course, first we thought, and we watched, we had the 6,000 level as a level that we continued to hold for a while and thought that they were strong there. They broke, and then we looked at 5,000, but we did warn once they got through 5,200 on the downside. We're using the Bitcoin, that's the easiest to use for an example, that there was some danger. So now they've broken 4,000. Okay. Now again, I'm not telling you, and please do not take this as a message to run out and buy them in bulk. My message to you is that if you're interested in playing and have not played so far, or if you're interested in playing and you have a few extra shekels laying around that you're willing to gamble with, remember, this is, at this point, this is very similar to the internet. The internet in the early days was a gamble. Okay. It was a new technology. It was a new way to do things. Very similar to the Bitcoin, okay? And if we go back to the internet bubble, we can see how many companies went out of business. And I think I own about 1,000 of them, because I think everyone I own is zero. And on my statements, they say non-applicable. But in the meantime, so again, I am not saying to you, nor am I championing the cryptocurrency world. I like it. I think it's real. I'm going to actually, after I'm done with Bubba's Bottom Line, I'm going to go buy a little bit more, just watching the overall collapse here. So again, but it is ugly, and certainly, as we hear in all markets, when they get down to certain levels, either they're going out of business or their value, and I think there are some value in some of them. Again, this is the biggest issue in the Bitcoin, is like the biggest issue that we had in the internet, and that was who's going to survive. We had so many different companies that did not survive, and of course, the markets will sort that out, and they will find a few. But in the meantime, as we look around some of the news from last week, durable goods, pathetic. CPI, pathetic. Okay, those are both inflation gauges. Now, again, when we look at this, not only were the new numbers bad, but they went back and adjusted and made the past numbers bad. So again, this goes into and onto what is going on with the general economy. Again, we have warned many, many times that this consumer confidence, first of all, is a backwards lagging indicator, number one, okay? Number two, the more consumers get confident, okay, the more trouble that we should be concerned about. Again, overconfidence is not a good thing. Overconfidence is not something that should drive us forward. What do we know about the general public when it comes to investing? What do we know about the general world about when it gets too over enthused? Typically, they are signaling to you that the top of the market is in, or the top of a product is in. Listen, it goes back to Beanie Babies when they were all the rage. Now you don't even hear about them anymore. So again, my simple point is overconfidence, overcomplacency, over willingness to now put yourself in debt, which is what we're seeing now. Again, debt continues to rise. And again, we are, as I've said many times here, a by-the-month society. So people feel that they're working, that they're going to be able to continue to work and have no thought in the back of their mind saying, you know, I could lose my job again. This could get bad again. And again, I don't want anybody to worry that I think that we're going to have another collapse. I firmly think and will predict that we're going to have another recession. I don't know that we will have a major meltdown and a major collapse. My projections in the equity market look to be about 25 to 30% down. Now, again, if you're hedged, it doesn't matter. And again, I want to make sure you understand that if you're hedging your portfolio, it doesn't matter where we go, you're going to be safe, okay? So you won't need Sir Lawrence Olivier to come with the little dental tool and ask you, is it safe? Is it safe? But my point is very simple, okay? Protecting yourself, staying away from overwhelming debt is the most important things you can do, because again, what we should all be worried about is the day-to-day living, while also being able to take care of ourselves and put some money away without accumulating debt. So if you can't buy something on your credit card that you can't pay for when the bill comes due, you probably shouldn't buy it. And of course, we're going to see nothing more than these crazy ads coming through over Christmas now. They happen all the time, but usually it's, you know, around Christmas, the Super Bowl, big sporting events. Come and buy your big screen TV. 90 days, same as cash. 6 months to pay, a year to pay, 3 years to pay. You know, the fallacy with all that is that if you don't make the payments in between, the interest goes all the way back to day one, and it goes back at what we call in the business usury rate money. Okay, usury rates is rates that are like in the 20% range. So trust me when I tell you that whatever you buy today, I urge you to make sure that you can pay for it when the bill comes due. If you cannot pay for it when the bill comes due, I urge you not to buy it. I urge you not to go into deep debt for these holidays. We're already in enough debt. Credit card, record highs. Margin debt, record highs. Auto loans, record highs. Student loans, record highs. And making new records each and every day. So I think that you have to continue to watch yourself and not put yourself in a position where you're going to make yourself miserable and you're going to have to pay off this. And of course, you're going to be paying off with dollars that are going to cost you more. And I think that's one of the things that is very important for us to understand. And I want you to understand it, because I don't want to see my friends and the people that watch me get themselves in deep trouble when the bills come due. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. Always great to be a part of it with you and spend the day with you. And of course, I want to remind you, first of all, on Friday, Black Friday, I did a hedging futures webinar combo. If you'd like to see that, it is free. I made a special offer there, which I will extend. It was over today, but I will extend for those of you that are on, that watch me on YouTube, and you can see it for yourselves. And we've just gone over 1,000 subscribers, so thank you very much. In the meantime, also want to remind you that my friend Adam Barata from Advantage Gold is willing to give you away his free book. Okay, Gold is a Better Way. It is for you, free. All you have to do is go to bubbatrading.com/gold. Get Adam Barata's book, Gold is a Better Way. He will send it to you. And of course, want to remind you about our high school investing program, okay, which is, you know, we're trying to continue to make this happen, and it looks like it looks like it may not make it. We're kind of on a respirator. But if you'd like to help us, you can go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. In the meantime, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, last week we felt, and we stated on Bubba's Bottom Line last week, that we expected a lower week. We expected the markets to sell off. Now, I did not expect, okay, again, in full disclosure, I did not expect to see a disaster, and I would say last week's selling was pretty much of a disaster. It looks to me that everything's breaking down. Now, you close the week with the Dow, S&P at very key levels. Either they should bounce from here or they could collapse. You've got the Russell and the NASDAQ, which are in really big trouble to begin with. So you've got some things to worry about. Now again, in the equities, we do expect a Santa Claus rally. Again, I think one of the things you have to remember about markets and about trading versus long-term and the economy is very simple. The markets are a little bit oversold. There should be we'll call it the Santa Claus bounce, because it does, even in 2008, we saw the Santa Claus bounce. So again, I would not expect this time to be different. I expect to see the Santa Claus bounce, and it could be a little bit more powerful because of how much we've seen so much selling into it. So we could see, this would be a rally that we would be looking to sell, the old rip your face off rally, because again, this is the type of action after you have some dramatic selling, and volume was fairly heavy for a holiday week. It wasn't heavy for normal trade, but it was basically just bang, bang, and they just kept bearing them. And of course, even the close on Friday on that short holiday day was really ugly. But again, so we would look for a rally. Okay, and that's what I'd be looking for. Now, longer term, again, as I said earlier, I'm looking for a 25 to 30% haircut in the market over the next, let's say, year or whatever, 18 months. Again, I think the highs are in for a long period of time here now. I think we go significantly lower, and again, I think we go into a recession. So we'll see how that plays out. Again, I'm not like the Fed. I'm not going to wait until 10 years later and tell you that this was a recession. I'm telling you now, I think we're going into a recession. I think things do not look as good, and that's because of obviously the debt and the costs and so on and so forth. In the meantime, oil, smash. It was just 7 or 8, it was just about 10 weeks ago. We had to puke out, and we're able to get back in, not with as big a position as we got puked out with, but we're able to get back in, and now oil has fallen 30%, which is we predicted. We thought that oil would get to under $50. Well, right now it's at 50. Okay, and now I think we get to 48, which was our next target. Now again, don't be surprised if oil gets a big bounce this week. And when I say a big bounce, a 10% bounce would be nothing to think about. 54 to 55, I'll be selling it there, but I would not be surprised to see it there. And I think, again, these are the things that you have to understand about how markets function and about how markets work and the price discovery model. And again, we talk about short covering rallies. We're seeing such a dramatic sale. I think oil is now down 8 weeks in a row or 10 weeks in a row, whatever the number it is, but it continues to get hammered. And it was amazing Friday, as a matter of fact. I wanted to sell more at like the 52 and change level. And I said, you know what? There's no reason to get involved. There's more likely going to be a bounce. And bang, selling. But what was more interesting is at the end of the day, it really got hammered for even more, I think, when the markets were almost closed. So again, I think it's something that we want to watch. I am not a buyer under any circumstances, except maybe for a possible trade, a short trade. I'm looking for rallies to sell. I think that's the right way to go. I've had a lot of inquiries about gold. As you know, I do write for Kitco. And of course, I've been fairly positive on gold. And gold has done basically what I've written almost every day. I mean, not to the T every single day. But again, I think gold looks great. As long as gold stays above 1,200, I'm looking for places to buy it. I think it has a lot of room to go on the upside. And I think that a lot of the suppression you've seen, because people are concerned about the strong dollar. And again, personally, I think the dollar can go a lot higher, and gold will continue to go higher with it. We seem to forget that when the dollar was down at 88, now at 96, almost 97, there wasn't that much of a variation in price of any of the commodities that are dollar denominated. So I would say to you that I think gold is still going a lot higher. And again, if you truly believe gold is a potential currency, if you truly believe all that, then there would be no reason not to be stepping into gold at these levels. Could it go lower? 100%. Now, this is where you have to make the decision. If you invest in gold, you are not buying gold for tomorrow, okay? You are not buying gold for a quick pop. You are buying gold because you believe in the hard asset and you want something that has stored value that you can put in your safe, you can have somebody store it for you, whatever it is. So you should not really care whether it's 12.20, 12.10, whatever. If you're trading, then of course we want to be careful and watch those levels. So you have to make the decision on what you are and who you are and how you're trying to handle it. Interesting enough, we had the bond markets push a little bit higher. 10 years, the rates are coming down again. Now this is more, again, we talk about the flight to quality and we talk about the Fed. This was a flight to quality trade. This is not the Fed being the Bernanke put, or today it's the Powell put, or whatever it is. This is a flight to quality where you can see there is some fear on the street. There's a lot of things going on around the globe that do not look very good. And I love the fact that everybody keeps saying, well, America, we're the cleanest shirt in the dirty laundry. It's the only place for money to go. Well, what about when people don't have money? Okay, does that come into play? Do I want to make a bad investment because it's the best of all the bad investments? That is why you're seeing some flow into treasury bonds. That is also one of the things you're seeing that makes the dollar stronger, because at the end of the day, the dollar is also a safe haven play in the scheme of markets to begin with as well. So again, you keep that in mind as we're going on, and that's why you're seeing a lot of the flush in the cryptocurrencies, which we talked about earlier. Now you've got the grain markets, they were a little bit soft, but I think if you take a good solid look at grains, corn is on great support, and I expect to see a big rally. Wheat is on great support, and we keep thinking that it's going to make a huge move one way or the other, and it keeps breaking to the downside, but it keeps holding. So again, think about that. Soybeans have been in a very narrow range. We expect the complex as a whole to have a very, very big rally. We are expecting huge movement. And again, if you want to put it on the trade wars, okay, that the reason we're down and pressured, I'm not. I think that's a crock of crap. But if you want to put it on there, I believe that these trade wars are going to settle sooner than you think. I think this week, as a matter of fact, when Trump and Xi sit down, I think you'll hear some positive news out of there. And if you believe that, if that's your theory, then there's no better time to buy grains to be, other than that as well. So I'm buying them regardless. I could care less what they do, because what do I know? Take a look at the Chinese economy. It's collapsing. You don't think they're going to need our product? And either way, they're going to buy our grains, whether they buy them through Argentina, whether they buy them through Brazil, whoever they buy them from, they're buying them from us, okay? Because we are the main supplier. So again, we can take that walk in. And again, I don't see the major effect on the tariffs other than the fact that the companies take advantage of these tariffs to raise their prices. This is no different than Starbucks raising coffee because coffee is going up. It doesn't affect them, and that huge profit margin, they never have to raise prices, but they want to screw the American public. Okay, all of them. And again, there's nobody who's immune to this. They all love to raise prices as fast as they can. I remember when cotton was going crazy a number of years ago. Oh, jean prices went up fast. Well, they never came down. So again, you can take that with a grain of salt. I believe that it's a crock. That's, again, opinion. But, so the meats also look very solid. Now, the meats look great. They have held up extremely well, held every support level we were looking for. Hogs have broken out. In fact, somebody asked me last week, and I said, well, I think December hogs probably peaked at about 60, which is about where they are. I think that February hogs have a chance to continue to explode forward, and they're really up. They're really doing nicely. So again, I think the agricultural space, I think the commodity space is a place where we want to start to put some of our dough, because I think at the end of it, that's where money is going to flow. Alternative money, as the equities fall apart, which I think they will, money will flow, in my opinion, into the grains and ags. In the meantime, just a couple of quick notes before we get to my commentary. Homeowner stuff is getting creamed. Again, we can't see the thing, and of course, this is what we talked about when rates go up, and this is why you don't have the free market. Higher rates, lower home prices. That doesn't look good. But I thought one of the biggest stories of the week is Patrick Burns from Overstock.com. The stock has really been getting hammered. It got down to, I think, in the 17s last week, closed the week at about 22. But Overstock.com, selling all that stuff. And of course, he was one of the first into the crypto world. Well, he is now selling off, which is what he wanted to do, I think, earlier, is selling off his retail business and wants to totally be in the blockchain and the crypto space, which I think he's right. I think he's a very smart guy. He was one of the first in, and of course, when the cryptos were much higher, that's why his stock was up at 80, and when they weakened, that's why it's now down at 20. But I think he's on the right track and he's on the right idea. In the meantime, we'll see how everything looks when it comes back. We're going to step out here for a break. Bubba's Bottom Line, and we'll be back with, of course, my commentary after the break. This is Bubba's Bottom Line. We'll be right back. What's up, everybody? Just remember, if you'd like to check out our high school program, we're kind of on life support and looking for help so we can keep it going, but it's getting close. But if you'd like to try to help us and save it, go to Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. And of course, don't forget about my buddy, Adam Barata. He's offering his free hardcover book on Gold is a Better Way. All you have to do is go to BubbaTrading.com/gold, and you can get a free copy of his book. Adam will be happy to send it to you, so check that out. And in the meantime, let's get back to my commentary at Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, again, I want to wish everybody a great holiday weekend. And I'm so happy that you decided to join me. And of course, I have a commentary, kind of a bitch. Okay, as you've been on some of my calls, you may know that I like to bitch a little bit. Okay, but again, as you may or may not know, I do a lot of media contribution. I'm on all the time talking about markets, and nothing pisses me off more than when these pundits and these imbeciles talk about high frequency trading like they know what the hell they're talking about. Okay, now this is something that is really an irritant for me, and I think it should be for you as well, because they are misleading the entire industry on what happens with HFT, algorithm trading, all that stuff. First, let me explain that high frequency trading is not trying to catch the next bear market and make a gazillion dollars on the way down, or the next bull market and make a gazillion dollars on the way up. They're trading for fractions of a cent in small little spots. They're trading big quantities in small little spots, okay? But in the meantime, algorithm trading, high frequency trading actually replaced the market makers. For you, the retail trader, high frequency trading is the best thing that ever happened to you. It is the best thing that happened. Why? Because it reduced your cost of commission, okay? High frequency trading allowed markets to go from fractions, which did not make market makers happy, to decimals. So we went from a minimum size market of a 16th, which is 6.25 cents, to some markets are a penny wide. So that takes that's benefit to who? The public. Okay, Michael Lewis, who wrote his book, and that jackass who opened up that exchange, saying that, well, the big firms lost all this money. That's again a bunch of crap. It does not happen that way. So now you've got markets that are much more narrow, which means that you and me, the retail trader, the public trader, can now buy and be very competitive with those that are trading for a living on the floors or that are making markets throughout these electronic exchanges. Okay, so now it made the markets narrow and tighter. Then what did it do? It brought your commissions down. I think we forget. I think the first electronic broker came out, maybe it was $9.95. Okay, now you're down, some places you're down under $3. Okay, so the high frequency trading brought together a much less expensive way to trade so that you and me could actually trade from our office, from our home, from wherever we wanted, because now the cost is not prohibitive. Remember, way back, to buy 100 shares of stock might have cost you $200. So we see bid offer spreads narrowing. When I first started trading in 1980, IBM's market was $1 wide from the bid and the offer. Now IBM's market's about 10 cents wide. So you tell me who benefits and how the high frequency algorithm trading hurts you there. But the biggest point of this is everybody wants to, nobody said that when high frequency trading, when the market was going straight up, you didn't hear a complaint about high frequency trading. Does the high frequency traders or the algorithms only work when the markets go down? I don't think so. Okay, so again, now the reason that you get these huge down moves, when the markets go down is not because of the algorithms, not because of the high frequency trading, but because everybody like you and me and all of us all have a way to execute. You know, we don't have to call our broker anymore to get that execution. We don't have to wait for the whole cycle to take place. We can execute instantaneously. So if people start to panic, if you start to panic, do you think you're the only one who's panicking? Well, guess what? 50,000 people hit that sell button at one time. What do you think is going to happen to the S&P? What do you think is going to happen to the Dow Future? What do you think is going to happen to the stock that everybody's panicking? It's going to collapse. It has nothing to do with the algorithm traders. They're sitting there trying to grind out the market, and they're just trying to squeeze out a little bit of the edge. Versus you've got 50,000, 100,000 people all at the same time panicking and puking, pushing markets down. That's where the big moves come from, not from the fancy algos. So please, pundits, get it right. HFT is the best thing that ever happened to the retail trader. It made the trading market fair for all of us, and it made it fair to bring us back in the game. In the meantime, thank you very much. This is Bubba's Bottom Line. I am Todd Bubba Horowitz. Everybody have a great weekend. Enjoy yourself. If you want a copy of that webinar I did on futures and hedging together, email me at bub@bubbatrain.com. And football. I've been really cold in football, but we're gonna continue to fight. Okay, I don't know who we like tonight. We're gonna take the Minnesota Vikings just for a pizza and a beer. Have a great weekend. Bubba's Bottom Line. We'll see you tomorrow with Bubba's Daily Update. Thanks, everybody. We'll see you later.